Good morning, everyone. Today is Tuesday, 9th of December 2014. You are watching a live daily market outlook prepared by Windsor Brokers. US dollars recent bulls are taking breath against the major currencies as some corrective action is seen during the Asian session at the beginning of European session after the dollar hit fresh highs against the basket of majors. Japanese yen is one of the top performers of the past couple of sessions and edged higher as the fall in oil prices now dented the risk appetite and prompted investors to trim short Japanese yen positions for some corrective actions. On the other side, commodity currencies extended their losses with the Aussie dollar hitting a fresh 4-year low against the US dollar, and Canadian dollar also hit a fresh 5-year throw versus the US dollar. The crude oil, which continues to fall, is now one of the most important components of the current markets and trading. The oil continues to move and reached fresh 5-year lows today. As I said, pressuring commodity-linked currencies for further easing. The urge for safety gave a rare boost to the Japanese yen, which was under strong pressure and hit levels above 128 against US dollar in the previous sessions. Now the corrective action is underway and the dollar yen dipped well below psychological 120 level. Much of the action was in crude oil again, which is now one of, as I said, the most interesting and important elements in the market, where the excess of supply as well as some political games have seen the prices fall for almost 6 months until now, and pressuring energy stocks and commodity-related assets globally. The price of gold, of crude oil, January contract of the American sweet crude oil reached levels at 62. 25.30, which are the lowest seen so far, with the trend still being negative and suggesting that further downside is seen as a likely near-term scenario. From the other currency pairs, brief look: euro dollar currently at 123.60, testing initial barrier and the previous range floor. Sterling at 156.70 at the moment after touching dynamic 10-20 barriers, 10-20 moving averages barriers at 156.80, no break at the moment. Dollar yen remains in the descending mode of fresh high at 121.38, lowest seen so far at 119.52 after the price action stabilized below psychological 120 level. Aussie dollar against US dollar, brief corrective action seen of today's fresh low at 82.22, focus at 82 psychological level, and in extension psychological 80.00 is in near-term focus. Spot gold from the other side benefited from the current market conditions and bounced again above psychological 1200 level, leaving a higher base at 1186, which now offers good support. Technicals will come in a while, and the more detailed outlook will be seen for most of the currency pairs. First, to have a quick look at the calendar today and see the important releases that were already out or due to be released today. Business confidence from Australia during the night came at 1. We didn't have forecast, but well below October's release, which was revised to 5. Unemployment rate in Switzerland dipped by 0.1% to 3.1%. Actually, dipped from the forecast, stayed unchanged basically in November, according to the forecast of 3.2%. Trade balance in Germany increased the surplus to 20.6 billion euros versus 18.6 billion revised quantity level of month of September, and 18.1 billion forecasted. From France, we will have government budget balance and trade balance, and more important is manufacturing production from UK for October, due at 9:30 GMT. 0.2% is the forecast in October, below 0.4% release of a month of September. That will be all important and interesting from European side. From America's small business index, which is the minor impact of the market release, is expected at 96, forecasted at 96.6 versus 96.1. GDP estimation for November, we don't have forecast. 0.7% is October's release. Jobs opening in October, 4.81 million, above forecast, above 4.74 million the previous release, and economic optimism is expected to tick higher in December to 47.2 compared to 46.1% in the month of November. Wholesale inventories, October release from United States, 0.1% forecast versus 0.3% previous release. Not to delay further, let's take a look at the technicals and see expectations for today for the major currency pairs and the commodities. As said, the dollar is taking a break in the current dollar. Bulls are taking a break, and the corrective action is underway. We have euros bounce from yesterday's fresh low at 122.44, with the second leg after leaving a higher low at 122.90, surpassing previous last night's high at 123.42, now attacking 123.60, which is previous floor, previous base. We take a look at the larger picture chart, and this is the support that offered previously a strong base. Now it's reverted to resistance, and the break above that level, and as well as a lower top at 123.90 would be a signal for some more significant corrective action, which would sideline immediate bears, as our restructuring studies are positive and indicators are heading north. But on the 4-hour chart, we still have a weaker tone despite north heading indicators. Requirement is seen on a break below 123.60, 123.90, which will bring 4-hour indicators into the positive territory and allow for a possible test of our pivotal barrier 124.55, peak of 4th of December 2014. In case of break, then near-term base, near-term low is to be confirmed at 122.45 and allow for a further corrective action, which will sideline immediate bearish attempts. On the other side, firm bearish tone still remains in play on the daily picture. We have yesterday's positive close, which now gives a signal for some stronger corrective action, as today's continuation of trading confirms these signals. Now we have 123.90 the daily 10 days moving average, and then 124.35, which is daily 20 days moving averages. First of all, break about 10 days simple moving average, and the close above this level is to confirm a positive near-term structure and the signal stronger corrective action. Of course, confirmation comes on a break above 124.35, 20 days one, and the lower top at 124.55. For now, minimum requirement is seen on a break and close above 10 days one, which would sideline immediate bears and allow for stronger corrective action. Alternative scenario sees close below the 10 days moving averages, a bearish signal, and possible return down towards recent low at 122.44, and resumption of a larger descent from 139.92, which is still focusing on the longer term chart. Bull trend line support at 121, and the low of July of 2012 at 120.42 seen as our immediate targets. With the break of this, if we take a look at the larger picture of this monthly bearish flag, expected to trigger some more significant downside movements once the price, the support at 120.42 is taken out. We'll be looking for a psychological 120 level, and then extension 118.75 low of June 2010, which will confirm formation of a bearish monthly bearish flag and allow for a deeper easing and the further retracement of multi-year extension, multi-year rally from 82.25 low of October 2010 to the peak of 160.39 July 2008 peak. British pound against dollar trades in the near-term corrective phase of yesterday's low at 155.39, and the second leg, which commenced from 156.24, where a higher low was formed, confirmed on a break above previous high at 156.77, is approaching 157 barrier, testing, having cracked basically important dynamic barriers, daily 10 and 20 days moving averages that are currently parked at 156.70 zone, with the sustained break here is to signal a version of immediate downside risk and allow, this is the resistance, pardon, is also reinforced by daily Tenkan-sen line at the same level. So sustained break above these levels is to confirm immediate risk, immediate aversion of the downside risk, and stronger corrective action ahead, which will also confirm the near-term bottom at 155.39. As yesterday's close in a positive mode gave initial signal of some possible stronger corrective action. Again, negative tone dominates on the larger time frames and is still intact, so current bounce could be seen as a brief corrective action before larger bears resume. We have initial barrier at 156.80 cracked, 157 comes immediately after, and 157.24 lower top of 4th of December 2014 ahead of 157.61 1st of December, also lower top. So these are the layers, important layers of resistances. What is important, today's close above 156.80, which will lend further support to the pair and allow for some a stronger corrective action. Otherwise, similar to euro, expect fresh weakness in case the price fails to clear and close above 156.80, which would keep immediate risk at the downside 155.39, which is the lowest so far, for possible resumption of the larger downtrend from 171.89, which is still focusing 76.4% retracement target at 153.73. Dollar yen is in a corrective pullback and corrects last Thursday, Friday's acceleration, with the now acceleration lower seen after the pair left the lower top at 120.99 and accelerated further down. The notion is supported by yesterday's dark cloud cover reversal pattern, which sees today's continuation as confirmation of a near-term reversal, and signals that upside attempts are sidelined at the moment in favor of some corrective action. The price action currently attacks 119.52, which is a daily Tenkan-sen line, as 119.28 currently comes in focus, daily ascending, daily 10 days moving average. So we have around 119.50, 119.30 strong supports of 10 days moving average and the Tenkan-sen line of the daily time frame, and the potential break and close below these levels is to confirm a weakness which accelerated from lower top at 120.99, and we'll be looking now for a test of a further extension lower. The price so far retraced exactly 50% of the upleg from 117.25 to 121.83. 117.25 is our key support. If we take a look at the larger picture, then this is the previous pullback from previous high at 118.96 to 117.25. This is the low of the pullback, so now it acts as a break point in case the price extends current slide on daily close below 10 days moving average and Tenkan-sen line. We may expect extension down towards 119 as initial support. Is the previous high and Fibonacci 61.8% of this 117.25, 121.83 ascend, and in extension 117.25 could come in the near term. Focus to avert immediate downside risk. 119.29, which is 10 days moving average, should hold today's action, and the close should occur above this level in order to start shifting focus again towards the upside. On the lower time frames, the picture shows bears getting fully in play as 4-hour indicators are heading sharply north of the oversold territory. RSI is currently below neutrality territory, and the MACD is heading lower, while momentum line is attempting below the midline, which signals possible extension of the pullback that requires a set break and close below daily Tenkan-sen line, daily 10 days moving average. Alternatively, holding above these levels would try to shift focus higher again. Minimum requirement is regain of 120.99 lower top, which will turn the focus again towards 121.83, and the signal resumption of a larger uptrend of 75.55 low of 2011 towards our next target at 124.14 peak of June 2007. And Aussie dollar against US dollar remains under pressure and extended descent to the levels close to the psychological 82 level. As we mentioned at the beginning, weaker oil prices are hitting commodity currencies, and Aussie dollar is one of the most important commodity currencies, signaling that further easing is seen as a likely near-term scenario. We have series of negative closures of the market in the past 5-6 days, so further downside should be seen as a favored scenario, especially if we take a look at the larger picture of the monthly chart, where extension of the larger descent from 2011 peak at 110.79 broke and closed below 85.43. It's 50% retracement. We are talking about multi-year ascent 148.12, 110.79, breaking also below the bear channel support, which now opens way towards psychological 80 level, and in extension Fibonacci 61.8% at 79.44. Back on the lower time frames, some corrective action, minor corrective action seen on the hourly chart should face initial barrier at 83 zone, where the minor hourly lower platform was left, and is reinforced by descending daily 55 days, hourly 55 days moving average on the larger 4-hour time frame. Overextended conditions with RSI coming out of the oversold territory suggest that some corrective action should occur in the near term. Nothing spectacular is expected as overall picture remains negative. Now, if we take a look at the daily chart, then also oversold conditions suggest that some corrective action should happen in near term, yet indicators are not showing firm signals of reversal. So we have hints of some corrective action ahead, and that's why I say it's for so far it's upside limited action, as long as we don't have firmer signals from our larger technical outlook, as lower time frames are showing corrective action. But overall negative tone is still in play on the 1 and 4 hour chart, which this reinforces the theory of limited action. Higher 83 zone offers initial resistance and seen there's a good barrier, while 84.15 previous low and previous low of 1st of December, as well as high of 3rd of December marks first break point. And if we see the clear break above 84.15, then further delay of larger bears could be anticipated. Otherwise, expect a mild correction and a fresh extension lower, which is now focusing psychological 80.00 barrier. And spot gold, as said, it's averted immediate downside risk and run away from a dangerous zone after the price bounced from 1186 correction pullback low, where higher base where the base was left, and the price again probes above 1200 psychological barrier. Highest seen so far is 1208 with and now positively aligned hourly and the 4 hour indicators at the midlines, giving some hopes of a possible stronger recovery action, especially that yesterday's positive close occurred after last Friday's long red candle, which was a good signal of some stronger corrective action. But at the same time, we mentioned yesterday long green weekly candle, which shows significant weekly gains, last time seen sometime June, month of June, suggested something opposite, and this scenario prevailed in this case, signaling a further recovery and the break above 1200 level, especially that price action showed yesterday's close. Yesterday's close of the market ticks above 1200 level, which is a supportive factor for some more significant action higher in the near term. If we take a look at our resistances, then 1208 is the next one, and then these peaks 1213, 1214 are seen as coming barriers, important barriers ahead of pivotal 1220 peak of 1st of December 2014, above which we can expect a resumption of a larger ascend corrective action from 1131. Now the price penetrated briefly into the daily cloud, into the daily Chimoku cloud, with the cloud base standing somewhere around 1225, seen as the next target in case the price clearly breaks above 1220, with the other barriers being at 1225 is also Fibonacci 76.4% retracement of the downleg from 1255 to 1131 is set 1255, 1228 cloud top. Then we have dynamic 1235 100 days moving averages seen as immediate barriers once the price breaks above pivotal 1220 barrier. On the downside, 1200 the level offers immediate support, which is also the higher base, minor hourly higher base of the recovery rally from 1186, with the pullback corrective actions expected to hold somewhere above 1191, which is another higher low, to keep our pivotal support at 1186 intact, and also to keep bulls in play for fresh attempts higher. Now 1200 support is reinforced by hourly 2055 days and 1055 days bullish cross, which sticks below the support, underpinning the action. Ideally, any corrective actions should be held somewhere above at 1200 level in order to keep media structure intact, but dips according to our studies are allowed down towards 1191 without harming strongly the near-term bulls, as overall picture of gold maintains positive tone as the price is supported by ascending bull trend line of 1131, which contained past two days dips Friday and yesterday. There were closes of both days above the bull trend line, which offers good support and keeps the downside protected for now. And this will be all from our side. Time for your questions. If there is any question, I would like please to be quick and send it to me. Okay, if no questions for today, our time is over, so we'll conclude today's session. Many thanks to all of you being with us. Hope we reached all the points which were your requirements for trading. And for anything else, any other comments, advices, whatever you would like to know, please don't hesitate to contact us on analysis@windsorbrokersltd.com, the email address that you see on your screen. Wish you a nice Tuesday. Expect, of course, to see you tomorrow morning again with us. Wish you a nice Tuesday and all success and profits in your trading. Good luck.